Hey everybody, Economic Ninja here. I hope you are doing great. I got a great story. We're going to be talking about Amazon stock plummeting, and we're going to talk about it because I already showed you guys in the beginning of the year between January and March. I talked about this specific event happening, and we're talking about Amazon's next quarter guidance. Stock absolutely getting hammered. We're going to share that with you real quick. We're going to jump into a story, and then I'm going to talk about it a little bit more. But again, I told you this at the beginning of this year because this is the natural evolution of an economic cycle as we move from inflation into deflation. But it doesn't mean everything's going to deflate at once. It's certain things deflating, okay? Now, right now, you see on the day, Amazon was down 4%, but really it's what happened after hours. Look, down 13.4%, just absolutely getting beaten and hammered. And again, I want you to realize how important Amazon is to the overall health of the stock market because it is such a massive company. Its market cap, $1.13 trillion. Now think about that. When it sinks 10%, think about how much money was completely just wiped away, especially if you were a seller at these prices, okay? So imagine that, and imagine how much of a hit on a percentage basis it has on an index, okay? All right, so here we go. We're gonna dive in. Amazon stock sinks 12% on weak fourth quarter guidance. It says right here, Amazon reported third quarter results on Thursday that missed analyst estimates. And again, this is the common theme. The guys that went to school to tell you where to put your money are consistently wrong. Why? Because most of them are younger and they've never been investors before, during, and after a economic correction or a crash. And this is going to be the mother of all crashes. And if you don't believe me, I dare you to hit the subscribe button and watch what happens. But it says right here, it also gave disappointing sales forecasts for the fourth quarter. The stock sunk in extended trading. Now right here, it says just the numbers, then we're going to talk about it because I can just check this out. Look at how easy it is. I'm going to copy it, paste it in the description below, and you guys are going to get to read it yourself. But check this out. Earnings, 28 cents per share. Revenue, 127 billion versus 127 and a little bit more billion according to estimates. So you'd say, Ninja, that's not a lot. That's just, look, 0.1 versus 0.46, that's not that much. But remember, again, it's not just about the miss today. It's about what they said is coming in the future. It says Amazon Web Services was 20.5 billion versus 21.1 billion expected. Again, they're wrong on that. Advertising, 9.55 billion versus 9.48 billion expected according to Street Account. And of course that's expected because they need to go out and advertise so that they can keep getting people to buy their useless crap from China. We're going to get into that in a second too. It says Amazon said it expects to post fourth quarter revenue between 140 billion and 148 billion, representing a year-over-year growth of 2% to 8%. Analysts were expecting sales to come in at 155 billion, according to Refinitiv. Okay, so again, it's putting its guidance lower. Now, let me give you a little explanation right now. And actually, I'm going to stop screen sharing. You guys can read the rest later. First off, Amazon wants to under promise and over deliver. All right. But I'm going to tell you right now, and mark this in your calendars, hit subscribe. Remember this video right now. When fourth quarter earnings come out, it is going to be lower. It is going to be worse than Amazon said, even though Amazon right now is playing a very time-tested, age-old corporate game when it comes to numbers as far as, under promising, over delivering. They are going to be caught up in a deflationary spiral that is going to even blow them away. All right. So I want you to understand that. Again, we're going to go back all the estimates by the analysts that went to school to tell you how to save money, because I'm not a financial advisor. I'm an investor. Don't take any advice from me. I'm just a dude with a bro hawk, a dream, and I need a cup of coffee. Hold on. It's really there. I promise. Not kidding. It's totally rude. See, a financial advisor would not do that. Point being is this. In the beginning of the year, I talked about how inflation was going to keep getting stronger and stronger. And when you add not only the inflation rate that keeps getting worse and worse because of the out of control money printing that the central banks and governments around the world, especially ours, which isn't a bank, it's actually private. It's private. It's not federal. Doesn't have any reserves. It literally lied. Its entire name's a lie. Not only is that causing inflation, but actually when they start raising interest rates, that's causing even more inflation because it exacerbates the problem because companies have higher lending fees, right? Borrowing costs. So it's going to make it worse and worse. And the snowball goes from small to big, rolling down the hill until it ultimately crashes. Well, I said in the beginning of the year, the reason why I knew that subscription services like newspapers, magazines, things like Netflix, and all that stuff was going to take a hit was because people need to go for the low-hanging fruit. The next thing was travel and leisure. After that, what you see is people not buying useless crap from China. And that is happening right now. People care more about the cost of their electricity bill, their food bill, and their gas bill. Or if you got a diesel truck right now because of a shortage that's looming, your diesel bill. And you got to heat your house. And what's happening is it's decelerating. See, the thing is that Amazon came out a couple of quarters ago or a quarter ago, and they were talking about consumer staples. That was actually, that increased, right? Where the useless junk from China decreased. Well, that useless junk from China, that they actually have more of that available than things that people actually need. Since they're not selling, just like brick and mortar stores, they're finding that they're selling less. People are focusing on the needs and not the wants. All right. This is going to accelerate extremely this quarter right now that we're in, which you're not, and next quarter. So even going into 2023, but I'm telling you, in January, you're going to see Amazon numbers come out and they're going to be lower than what they said they expect now. And if you think that pulling, 10, 12, maybe 15% of a market cap of a over $1 trillion company is bad now, wait till it gets worse and those numbers even dive down below the company's estimates. I want you guys to realize where you are at right now. This is not the time to be buying useless crap from China unless you got the extra money. Cool. I mean, hey, I got stuff like right now. Check this out. I got something cool that I'm gonna be doing a video with. And I got it from Amazon, and it's a little device that I can go scan things at garage sales because I have that side hustle course and I'm teaching people how to make money right now. This is the time to save money and to make money. And when you make the money, you go back to saving the money. Why? Because as this deflationary spiral gets out of control and just keeps going down the drain, you are going to find more and more opportunities to buy the things that not only you've always wanted and couldn't afford, but also you'll be able to take a lot of that and you'll be able to resell to people that were smart enough to save in the first place. The fact of the matter is, who gets to the deal first? And that's why I want you guys to be ready for the greatest real estate crash in history. Trust me, this is so much worse than 2008. And I only know that because I'm not only a real estate agent, known a couple of real estate brokerages, and I'm the worst real estate agent, I always say. But I was a good real estate investor and I knew when to get out. And that is the most important. You know when to get out. I got out before the dot-com crash. I got out before the real estate bust. And it wasn't because I was before. I actually got out while it was breaking, but that was in 2006. Most people think the crash came in 2008. It did not. Okay, that's just when the masses figured out. They woke up and went, what do you mean? What do you mean? What do you mean my 401k is worth like half? What do you mean this? What do you mean that? That's when everything went to crap in a handbasket. But you get out before that. This is the time. But again, I'm not a financial analyst, financial advisor, being completely wrong. I'm just a dude with a rock and a dream. Guys, I'm linking the story in the description. If you want to check out the Side Hustle course, I just uploaded a new video for the real estate portion of it. I hope you guys have a great day. With that being said, the Economic Ninja is out.